Hello and welcome to Business Today. I'm Siddharth Zarabi and we are counting down to the news flashes from the economic survey, one crucial precursor before the big budget that comes out tomorrow. And the budget session of Parliament has begun. Expectations clearly are very high on what the government will unpack tomorrow in this very crucial budget presentation. Though there's the usual secrecy around the budget, with the crack team of the Finance Ministry still in isolation in North Block, the Prime Minister earlier today gave some hints of what may be in store, particularly for the middle class. Here's a look at what he said in the morning during his address to the Parliament.
बजट सत्र के प्रारंभ में मैं समृद्धि की देवी मां लक्ष्मी को प्रणाम करता हूं। और ऐसे अवसर पर सदियों से हमारे यहां मां लक्ष्मी का पुण्य स्मरण किया जाता है। सिद्धि बुद्धि प्रदे देवी, सिद्धि बुद्धि प्रदे देवी, भुक्ति मुक्ति प्रदायिनी, भुक्ति मुक्ति प्रदायिनी, मंत्र मूर्ते सदा देवी, मंत्र मूर्ते सदा देवी, महालक्ष्मी नमोस्तुते, महालक्ष्मी नमोस्तुते। मां लक्ष्मी हमें सिद्धि और विवेक देती है, समृद्धि और कल्याण भी देती है। मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे।
Very interesting choice of words from the Prime Minister. Today is Friday. In Hinduism, Friday is the day for worshipping Mata Lakshmi, the goddess of wealth. The Prime Minister making specific mention, uttering a shloka that is used to pray to goddess Lakshmi, and also towards the end, viewers, as you noticed, speaking about Garib and Madhyam Varg. A very, very interesting choice of words, and I will go to my panel of senior economists who are joining us to decode, and also as we count down to the release of some of the news flashes from the economic survey. Lok Sabha in session. The speaker was speaking till a little while ago. Finance Minister Nirmala Sitharaman present there. We'll try and bring up those visuals on screen for you. The moment she tables, we'll hopefully start getting that news. We also have our guests with us, but before we do that, I also want to play out another important comment from the Prime Minister. Okay, we have news. Nirmala Sitharaman has tabled the economic survey for FY25 in Parliament. We can in fact see the live feed, feed from the Lok Sabha right now. The economic survey has been tabled in Parliament, and we hopefully should be getting all the details. And the House has been adjourned, but the news flashes will start coming very briefly from our team. But let's quickly listen into what the Prime Minister also had to say about another aspect of the Parliament session, and this is to do with no spark from abroad. Let's quickly take a listen into that as well.
साथियों, आज एक बात आपने जरूर नोट की होगी, मीडिया के लोगों ने तो जरूर करनी चाहिए। शायद 2014 से लेकर अब तक शायद ये पहला पार्लियामेंट का सत्र है कि जिसके एक दो दिन पहले कोई विदेशी चिंगारी नहीं पकती है, विदेश में से आग लगाने की कोशिश रही हुई है। 10 साल से 14 से देख रहा हूं, हर सत्र के पहले शरारत करने के लिए लोग तैयार बैठते थे, और यहां उसको हवा देने वालों की कोई कमी नहीं है। ये पहला सत्र मैं पिछले 10 साल के बाद देख रहा हूं कि जिसमें किसी भी विदेशी कोने से कोई चिंगारी नहीं हुई।
Right. That was another crucial aspect, and this has to also do with the functioning of Parliament, the quality and the time that is given to debates for important legislation, and clearly the finance bill being one of the most important one. Let me go across to Aditi Nayar, Chief Economist at ICRA, who's been here with us. Aditi, warm welcome to our coverage on the economic survey. We still await the details from that, but let's for a moment focus on the Prime Minister's comments, especially mentioning the Madhyam Varg and the poor. What do you make of this? Is this a solid hint or have we heard this before?
Certainly could be a signal coming in today's speech. I don't think we can rule that out, and that would suggest that tomorrow perhaps we could get some tinkering as far as the income tax rates is concerned, and maybe some more new schemes or expansion in schemes related to the segments that he would be referring to, perhaps some more welfare schemes related to the rural segment or the urban poor. It'll be quite interesting to see what the budget follows up from this comment.
That's a key point. Let me also welcome Sajjid Chinoy, the MD and Chief India Economist at JP Morgan, and Indranil Pan, Chief Economist at Yes Bank, on the show. Good afternoon. The economic survey flashes have started coming. We are going to put them up on the screen and I will read them out for our guests and for our viewers to absorb. The economic survey says FY26 GDP growth seen at between 6.3 to 6.8%. That's one of the key very important lines that has come up right now. Let's try and bring that up on the screen. The economic survey has projected FY26 GDP growth at 6.3 to 6.8%. One of the key highlights coming out. Sajjid, let me take a comment from you on that news flash, and what do you make of it?
Hi, Siddharth. Good afternoon. I think that's a very fair range. The economic survey under the last few years has been extremely credible, extremely restrained. Even for this year, the GDP number was around the 6.5% range, and I think giving a range is important because we're just living amidst unprecedented global uncertainty, right? And with the prospect of trade wars, geopolitical conflicts, commodity prices moving around, Chinese excess capacity, there are just too many moving parts. So I think it's important to be sober, which I think the economic survey is. B, it's important to be nimble, which is what I think that range of forecasts is telling you. And if you ask me, Siddharth, I think the key question for India going into this budget is how do you balance responding to the domestic growth slowdown without appearing to let your guard down against a very hostile environment? I think that's the key challenge for policymakers in the budget, and it'll be interesting to see how they navigate that.
That's an important point. Indranil, coming to you on that same growth projection as one of the key numbers that have emerged so far from the details that we have of the economic survey.
Well, I think in terms of the growth numbers, I'll agree with Sajid. It was important that you give a range simply because there are too many unknowns that will be there in the global atmosphere, the risk perspectives, therefore probably lower capital flows for the country. And all this will have its implication in terms of the growth projection numbers. But broadly, I think the range does match with mostly the sort of range that we economists have also been putting out. And therefore, I would sort of also sort of indicate, like Sajid, that it's a credible range, no doubt. And policy making will have to a certain extent, ensure not only to get the economy out from the current cyclical slowdown that may be there, but also create the atmosphere, and this goes to the budget, to create the atmosphere in terms of how we can confidently approach the Viksit Bharat in 2047.
Aditi, would it be fair to say that by putting out a range at this level, and as we try and get more details from the survey out for our viewers, very clearly one of the concerns is how much of a spending push can the central budget take on itself, given that fiscal consolidation very clearly in the run-up to the budget is the message that has been emanating from all conversations we've been having with officials in North Block.
Sure, Siddharth. So, the baseline point estimate we're working with for FY26 is also 6.5%, which is right in the middle of the economic survey's range. And I fully echo what Sajjid and Indranil are saying, that given the kind of global flux that we are faced with, it's very much more prudent to have a range within the economic survey for FY26, just as we had for FY25 at 6.5 to 7%. And we're expecting that the Indian economy's growth will be at the lower end of that range. So our forecast is 6.5% each for FY25 and FY26. Of course, the first advanced estimates came in a little lower at 6.4%, but we're holding on to our 6.5% forecast for both years. Now, going ahead, our sense is that there is going to be an inevitable large undershoot in capital expenditure in FY25. We had the elections that disrupted spending in Q1 and heavy rainfall that disrupted spending in parts of Q2. So on the curtailed base within the aegis of fiscal consolidation and where we think the fiscal deficit is going to end up, we think that the government of India can show a 12 to 13% growth in capital spending in FY26. So our sense is that the budget could target 11 trillion in capex for FY26, very similar to the number that they had for FY25, which unfortunately is looking highly likely to be undershot.
Okay. Sajjid, I'm coming to you as we get more details from the survey out on the screen. And one of the big questions that we have seen so far is the debate around what will the finance minister do as far as taxation policy is concerned, clearly from a view of supporting consumption and the middle class that found a mention in Prime Minister Modi's address before the session began. What's your own reading of the situation?
Siddharth, I think it's important to understand the macro constraints that the budget is facing, right? We know that the government has a fiscal consolidation path, and they've said that by 25-26, the central fiscal deficit will be, at 4.5% or below. So it's reasonable to assume that we'll get, a 0.5% of GDP fiscal consolidation this year. Now, that is going to reduce degrees of freedom, because if deficits have to come down, then either revenue has to move up or expenditure has to come down, and it'll be important to see whether how the consolidation is achieved. My personal preference would be for it to be a revenue-based consolidation, so that expenditures can be protected. Aditi made a very important point. We're in the midst of a big capex push by the central and state governments. This year, we've seen state governments, take their foot a little bit off the pedal because state subsidies have gone up. It's therefore very important that the center keep pushing on capex, maintain it as a share of GDP, and ideally even push it up as a share of GDP if at all possible. This means that degrees of freedom are constrained. So yes, I think we may well have targeted help for certain sectors, whether it's on the expenditure side or on the tax side. But we have to recognize that those will then have to be made up in other ways. If the deficit's coming down and some sector gets relief, then that will have to be compensated in other ways. So I think there are lots of moving parts over here. My own preference is, I know there is a clamor from markets for tax cuts, and I think targeted tax cuts have helped. But in general, expenditure multipliers tend to be larger than tax multipliers. And so if the budget wants to give a stimulus to the economy, relying on the expenditure side and the bottom of the pyramid typically gets you higher multipliers, along with the fact that capex gives you a lot of medium-term multipliers. So there are lots of moving parts that they will have to consider.
Okay, I have some more lines, and one of the points that you referred to, Sajjid, the survey has said that we need to increase private participation in the infrastructure sector. The survey says investment is expected to pick up, supported by high public capital expenditure. The survey, and this is the point that you just made, Sajjid, rebounding rural demand augurs well for consumption in India. It says that in FY25, capital expenditure gathered momentum post the elections. Chief Economic Advisor Nageshwaran has said that the world is perhaps evolving more rapidly than we realize. It says food prices are seen contained in the first half of FY26 on account of a good Rabi output. It says food inflation is likely to soften in January-March quarter on account of seasonal factors. On the global side, it says end of rapid world trade growth clouds India's export growth outlook. And one more point before I go to Indranil, and this is the survey's comment, seems to be a hint, we'll have to wait. It says bringing in innovative frameworks for investment in infrastructure projects. I repeat that for the benefit of our viewers, bringing in innovative frameworks for investment in infrastructure projects. Indranil, if we read the re-endorsement of sorts as far as capital expenditure is concerned, and this hint, it means that the center, does it mean that the center will continue to keep its pedal firmly on the infrastructure capex driven growth strategy of the recent past?
Well, I think there will be very little choice but not to do that. And as Sajid rightly pointed out, yes, there can be some benefits through tax cuts that is going to the lowest segment of the population. But those are not sustaining benefits that will come to us if we are looking at achieving a 7.5% growth in the medium to long term period. Infrastructure has to be the only way that we need to go ahead. The problem, however, with the infrastructure is, and this I think the Chief Economic Advisor had also sort of alluded to in a previous occasion, where he says that the capacity building of the government is seeming to be restrained, which necessarily means there has to be an increase in the capacity building through the private capex also. And that in my opinion fits in perfectly well in terms of the innovative capital that the economic survey is talking about, in the light of the fact that net sort of financial savings in India is weakening because of relatively higher net financial liabilities actually going up. So I think these are very important perspectives that the budget will have to look at. And in the context, once again mentioning global atmosphere remains quite hazy, which is indeed from a push factor affecting the FDI and the FPI and the ECB flows. And therefore, the Indian economy and its inherent strength needs to be solidly increased, and therefore the budget assumes that much of importance in this particular year. And unless we do that, even the pull factor in terms of the capital flows that we would talk about may also be missing.
Okay, I have some more lines. More news flashes trickling out of the economic survey, viewers. So bear with us if you feel that the news flow may be taking time to pick up. But the survey says the slowdown in investment activity is likely temporary. It says many upsides to domestic investment, output growth and disinflation in FY26. Fundamentals of the domestic economy remain robust. A good Rabi crop is likely to contain food prices in the first half of FY26. Trade outlook remains clouded in the next year. I think this is one of the most significant comments which our experts, economists have been commenting on. It says that over the next 5 years, global growth is expected to average around 3.2%. These are some of the additional details. It says the FY25 national monetization pipeline is at rupees 1.91 lakh crore. The economic survey also says that India needs to improve its global competitiveness through reforms. As far as reforms go, Aditi, I'm coming to you because one of the news points that we have also picked up prior to the budget is that the budget may contain some sort of macro level statement with regard to the reform strategy for Modi 3.0. While we may not see the details, perhaps the idea is going to be fleshed out in the budget. From a broader perspective, what kind of reforms could ensure the things that the economic survey seems to be alluding towards?
So just to kind of go back to one of the comments that you made earlier in terms of the domestic economic outlook being robust, I think I'm going to add one more adjective. It's robust, but it's highly uneven. And I think that's what reforms and overall policy direction really need to address. The fact that we have a lot of unevenness across the economy. We have a services sector which is doing better than manufacturing sector. We have jobs that are getting added in agriculture in larger numbers than in manufacturing and in services, which is ideally what we would like to see. We have consumption demand where rural, we hope, is going to pick up on a more sustained basis going forward, whereas urban remains highly uneven and segments are certainly getting affected by the high food inflation that we've seen over the last several quarters. Even within the investment space, unevenness has been there, both on a temporal sense and government versus the private sector. So overall, I think reforms need to be a little more targeted toward the sectors that are still lagging or that aren't really holding their own within the overall resilience that we see for the Indian economy. And certainly when we compare the Indian domestic macro fundamentals with what's happening in the rest of the world, it's a very optimistic, albeit uneven picture. But global uncertainty is at a high and it may not settle down anytime soon. So that's something that we need to look at as well. In terms of exports, I certainly think that we need to be ready for the global scenario that we're in right now, where tariff uncertainty is possibly going to remain quite high, and we need to think about de-risking, maybe look at alternate markets, maybe relook at some FTAs, and build this into the overall economic policy framework for the medium term.
Sajjid, as I come to you, I want to read out some other important lines that have come out. The CEA has said that the most effective government policy can be significant rollback of regulation. Now, this rollback of regulation echoes what seems to be happening in the United States, although the argument for the United States is that the baby and the bathwater both are being thrown out. As far as Europe is concerned, very clearly over-regulation is causing problems, but this now being said in the Indian context, I want to come to you for your comments, but let me just take 2-3 more lines. The economic survey also says that much remains to be done to enhance trade competitiveness. Again, this is a point that all of you have been raising. Infrastructure related ministries use 60% of budgeted capex in the April to November period. So that's a very, very important number. All of us had a sense of the spending, but the survey is putting it together, and the slowdown that we saw on the government account really being captured by this number. But Sajjid, on the point of that I made to you with regard to rollback of regulation, Sajjid. I think you are on mute, Sajjid. We can't hear you. You perhaps need to fix that. Okay, Sajjid, we'll fix that. There seems to be some issue. But Indranil, on that very question to you, and then I'll come back to Sajjid once his line gets fixed.
Well, I think a point very validly made, but the problem is that implementation with regards to the specific point has not been at the same pace as the government would have liked to envisage. So there are significant bottlenecks even today, even as we talk about ease of doing business. There are significant bottlenecks in terms of the cost of setting up a business in India vis-a-vis the cost of setting up a business, even in say a place like a Thailand or a Vietnam. And these are some of the factors that the Indian policymakers would very critically need to look at when we talk about the China plus one strategy so far as manufacturing is concerned. It is not really in terms of the taxation structure only for so far as the corporate taxes are concerned, but I think some of these issues still remains a bottleneck in terms of setting up the manufacturing unit in India. And this definitely makes a very this definitely is a very valid suggestion that has been put up in the economic survey. I really don't know how this can be fixed through the budget only. It has to be a rolling momentum in terms of the policies throughout the year and fixing up wherever you see a sort of loophole, and we have to go ahead as we come to implementation and sort of fixing up and ironing out the loose ends out there.
Sajjid, coming back to you, and one more point that we just to add, India can't escape growth pains even in the next financial year. This is one of the other important lines. One more bit of data. National highway construction as per survey is 5,853 kilometers of national highways in the April-December period versus 6,215 kilometers a year ago. So some of those small data points, the CEO also saying that the Indian economy is on a steady growth path. But Sajjid, your comments about over-regulation and perhaps what that hint could be in the medium term, if we believe that the centre will also outline a broad reform strategy tomorrow in the budget.
I think this is a very important point, Siddharth, because I think to Dr. Nageshwaran's credit, he's been making this point for the last decade, even before he became Chief Economic Advisor. Why is this so important at this particular juncture? We have to recognize that fiscal limits are now being reached. We're on a fiscal consolidation path. It's going to be very hard for the government year after year to keep increasing its public investment levels, not just for fiscal reasons, but also there'll be absorptive capacity constraints. So the challenge for the economy is as the fiscal gradually retreats and as public investment stabilizes, that gap or that vacuum will have to be filled by the private sector. Now, what are the constraints on private investment? In my mind, there are two, right? There is a demand visibility issue because capacity utilization is around 75% or thereabouts. And in this uncertain world with a lot of Chinese excess capacity, it's understandable Indian entrepreneurs will want to see more demand visibility. But there's another really important component, which is called animal spirits. And I think this is where deregulation is really important because investment is the function or the intersection of demand visibility with animal spirits. And to the extent that the government can judiciously deregulate, make it easier for business to operate, that has two benefits here. A, you are harnessing the entrepreneurial energy of Indian businesses, but B, you're positioning yourself as a more attractive investment destination when multinational companies are choosing about where to locate. So I think this is really crucial for animal spirits. Also, I'll make a couple of final points. Everybody's very focused on the fiscal math for tomorrow. There are limited degrees of freedom given this consolidation path. I think the real interest tomorrow will be on the other initiatives that the finance minister announced in July. The economic policy framework, review of custom duties, reimagining the financial sector, review of the Income Tax Act. That's where a lot of the action can be. We're constrained by providing a fiscal stimulus. But in the first full budget of the third term, the government can certainly focus on a reform stimulus to try and jumpstart animal spirits.
Absolutely, and this would be a crucial priority. Sajjid, thanks very much for your time with us today. I go across to Indranil. Indranil, one of the other points that I can now read off is the survey saying that green shoots in capital formation are visible, and reiterating in another section of the survey the point that was made earlier, that investment activity slowdown is likely temporary. So at this stage, just for the benefit of viewers, the sense I get, Indranil and Aditi, to recap what seems to be the survey's tone so far is, in as far as India is concerned, things are steady, growth is happening, there are key measures required to further propel growth. But the survey is clearly putting out some warnings, some red alerts as far as global growth and particularly the trade order, which will directly impact our exports. So, not all is well internationally, but things are steady domestically. Is that a sense you will share, Indranil, from the reading of the lines so far?
Well, I think yes and no, in the sense that very clearly it is talking about trade crunching down for India, which necessarily means that your domestic economy needs to be relatively on a very stable path and also has to look up. Because the Trump policies will continue at least for the next 4 years, and therefore the uncertainty that we have been talking about from the global atmosphere can actually continue. Nobody knows about it, which necessarily means that the building blocks that we are looking at has to be more from a domestic perspective. Gone are possibly the days when trade would have been the engine of growth and global cooperation would have been the engine of growth, and hence sustaining the huge population in India is challenging. And also the other challenge remains that our per capita income goes up quite significantly from here on for the domestic consumption to sort of persist in a sustainable manner. And I think therefore the budget, and this has been highlighted even in the previous budget, and we think that there will be a reiteration of the same in the current budget, and also strengthening of some of these issues in terms of the productivity, issues in terms of skill mismatch and gaps being covered up, the employment sort of generation happening, to me remains much more important than only purely talking about physical infrastructure. Issues in terms of India's education sector and the healthcare sector. I understand these are sort of subjects which are more being looked at the state levels, but I think I think that we need a sort of a push, a significant push also from the central government towards these areas if we have to build a sustainable growth momentum for the Indian economy.
It's interesting, Aditi, that one of the lines, and this is for market participants, a significant line really, the economic survey saying, and I'm trying to read it verbatim, large prolonged share market fall can have a non-trivial spending hit. So the survey, taking note of what's happening in the markets and making a mention of that, I wonder whether the tax department, whose actions of recent past have also caused some grief to people in the share market, will take note of this. But what do you make of this, Aditi?
I think it is a concern from a wealth effect point of view. In the post-COVID period, one of the reasons that we've seen spending, particularly for the wealthy urban segment, continuing to be very high. It became like a new normal, the high spending that we've seen in the post-COVID period. That the part of that has been the wealth effect from the stock markets doing very well, and I think this is a valid concern. Of course, let's see if the rest of the finance ministry takes note of it. But certainly the wealth effect related to wealthy urban Indians and the stock markets, that has been one of the reasons that the overall urban consumption growth has been quite healthy, despite the fact that for the middle income and the lower income segments, we've seen inflation being a much bigger concern.
Viewers, what we will do at this stage is to take closing comments from both our guests. The point that I asked Indranil, I'm going to put that to Aditi as well. But just to take a few more lines. One, India's data center market, according to the survey, and this is significant given what's happening in the world of artificial intelligence. India's data center market, according to the survey, is expected to grow to $11.5 billion by 2032. I don't know whether projections of that period, given the fast changing developments in AI will remain valid, but it's a significant number in any case. It also adds that the aim is to construct data center capacity with over 1 gigawatts of capacity in the next 3 years. The survey also needs to says that India needs to improve price discovery, market efficiency in the farm sector. I wonder how much the people there in that sector would buy into that. But one final point, India needs reforms and deregulation. Aditi, before I go to Indranil, I want to pursue this thought with you. The survey clearly, therefore, giving us a global picture and a domestic reading of the economy. In the domestic reading, within all that a survey in the kind of language that economic surveys use and the individual stamp of the chief economic advisor, would you agree with my view that it is calling upon government to deregulate, to reform and to take urgent steps to prevent and mitigate the impact of what is likely to play out globally?
And they are probably quite right. I mean, obviously, we haven't had the chance to go through the entire survey, but I think your reading is quite right. Uh, but sometimes what economic surveys suggest and what budgets are able to do, there can be a long chasm between the two. So let's see. Let's hope for the best tomorrow. I think there's lots of fiscal realities that the government has to contend with. They have prior medium-term fiscal path to adhere to for the RE for FY25 and the BE for FY26. We're waiting for the new medium-term fiscal path to be announced, which is possibly going to be on debt consolidation and not the fiscal deficit. We have a pay commission that is being set up, and we have a finance commission that is preparing its recommendations. In the midst of all the global uncertainty and the transition risks and the environmental commitments that we've made. So it's a very, very fluid world. And what can we fit in into tomorrow's budget versus what the government has the whole year to unveil ahead? Let's see, and let's hope for the best.
Well, that's a sort of a sobering dose of realism that you have given out, Aditi, as far as expectations are concerned. Our job is to reflect on expectations and people's belief. And Indranil, very clearly, that big expectation, will something happen for the middle class? Will income tax rates, slabs, structures be tweaked? I'm going to latch on to the Prime Minister's statement about the Madhyam Varg. Should the Madhyam Varg remain hopeful at least for the next 22, 23 odd hours?
Well, I think I really can't comment on whether there is a tax cut that is coming. But as you rightly said, is widely expected. Now, the Madhyam Varg for me means a lot of other things also in terms of the youth that he's talking about. I think the critical issue that the government needs to be cognizant about is that the post-COVID, my fear is, and it's very difficult to show up in terms of a data, but I think post-COVID there is a deadweight loss that is still being carried, which necessarily means that the lower end of the income pyramid has actually widened. And very clearly, I think efficiency of policy measures and how you target policy measures towards this pained segment of the economy, which has actually possibly grown post-COVID, that would be most critical rather than anything else. And just to throw some statistics, I think only about 7.1% of the total India's population files income tax returns, of which only about 2% of the Indian population actually file a non-nil returns. And therefore, any tax cut efforts, in my opinion, is not a pervasive measure so far as getting consumption up is the critical question. The critical issue is how you get per capita income onto the higher side, how you evolve your agricultural sector and look at better productivity so as to sort of provide price discovery in a better way towards the agricultural sector, and therefore turn the terms of trade in favor of the agricultural sector, even as we continue to pat our back in terms of containing food inflation. So I think these are some of the very critical challenges that the policymakers will have to undertake. And even as we talk about a rate cut by the Reserve Bank of India around the February or the April, whichever is the starting date, policy measures and reforms measures remain critical. And unless consumption is sustainably on the higher side, my fear is that the private investments will possibly continue to lag also.
Absolutely. That's a good summary, Indranil. But I want to end with one more line that's now up on the screen, viewers. The survey says India needs 8% growth for a decade or two to become Viksit Bharat by 2047. Very clearly, the Chief Economic Advisor, and as far as all news is concerned, this is likely to be his last outing unless he is asked to stay back, is making this very important point about how higher growth and higher growth alone can ensure vikas and development for all of the people of India. We are now ending this conversation with our guests here, but I leave you with two very, very important thoughts. What our economists on the panel today have made it clear. Expectations multiple, but the reality is far more checkered, especially on account of committed expenditure and some of the new promises that have been made. So therefore, the headroom, the fiscal headroom for Finance Minister Nirmala Sitharaman, who will deliver a record budget speech tomorrow, are very, very clear, and we will have to see what is done. But take a look at the markets. The markets seem to be reacting perhaps to some of the fine print from the economic survey. The broader indices up, some FMCG stocks also doing better than before. And clearly, as far as the economic survey is concerned, you can see right up there on the screen some of those stocks well up in the green, at least from a market point of view, and whatever little attention that market participants may be paying to the economic survey, clearly the mood seems to be better than we have seen before, and we will continue to track the markets today and the economic survey. Chief Economic Advisor Ananta Nageshwaran's press conference set to happen in around 20 minutes from now. We'll be live with that. But on that note, I'm going to thank all our guests today on the panel and you, the viewer. We'll be back with our continuing coverage today and tomorrow. Do stay tuned in. Goodbye.